Hey guys, welcome to another episode of Thinking Like a Bank, where we show you how to think like a bank using the same strategies and principles that banks use to help you find more financial freedom in your life. I'm your host, Sari Ibrahim. Now, when it comes to thinking like a bank, there are some core principles. And we mean this more from like a theoretical standpoint, not necessarily how to start an FDIC insured bank. It's just more of the principles of thinking like a bank. That includes owning real estate or investing in real estate, saving on taxes, and having safe and predictable income. And I wanted to touch on one of those things today. It's investing in real estate, and even specific to that, it's title insurance. Since a lot of people have no idea what title insurance is or how it works, I wanted to bring an expert on the show today. His name is Michael Ham. He is the host of the Morning Spotlight podcast and a sales executive at Fidelity National Title Group. Mike, welcome to the show.
Siri, it's great to see you again. I mean, we had you on the show back in whenever that was. I mean, 2020 is just a total blur, but I know you were on the show. I remember you being there for sure, because I remember we talked about boxing and the whole thing, and bank on yourself and all that. So I'm excited that you started a show. I'm really excited to be here. Thank you. That intro was better than any intro I've ever done in my entire life. So I'm pumped, ready to go.
Thank you so much. Thanks for joining us. Now, before we jump into all of the moving parts about title insurance, tell us a little bit about your background.
Yeah, so I have a very interesting background, and I don't say that to kind of like make myself seem cool. So I started as a college baseball coach out of college. So I was a college baseball coach for 4 years, graduated from TCNJ, the College of New Jersey in 2012, coached at the TCNJ, Franco de Marshall College, and St. John Fisher College over a 4-year span. At St. John Fisher, I was a grad assistant, so I got a free MBA as I was coaching, which was awesome. Decided that I needed to kind of make a decision. I could either keep going the coaching route. I didn't really have any job offers that were appealing to me. I mean, I had a couple, just like didn't really do it like what I was looking to do. I wanted to try to use that MBA that I worked so hard to get, and maybe marry it with the baseball stuff. I wasn't really sure. So I moved back to Jersey because Fisher was up in Rochester, New York. Moved back to Jersey in 2016. Got a job at indoor sports facilities, like a director of operations. I was like, oh, this is going to be cool. I'm going to take the baseball stuff and the business stuff and run this small, family run business, basically. It wasn't a good fit for a lot of reasons, but, it is what it is. Not everything is a perfect fit all the time. And then eventually got involved in title insurance. And I got involved in that because my father, because most people, I mean, I'm sure your listeners, maybe they know about title insurance, but my dad's worked in title insurance for 35 years. I never really knew exactly what it was until I actually started working in the industry. So it took me, so I was at the indoor sports facility. He was like, listen, like, I know you're miserable. What about title insurance? And I was like, okay, I'll try it. So like I applied, I got an interview, got a sales job. I'm still doing it 3.5 years later. Started in August of 2017. And so it's been quite a ride. Over that time, I've had a lot of successes. Obviously, last year threw a lot of challenges at us for a variety of reasons, which I'm sure we can get into if you want. And then, kind of moving forward, like I put together this podcast. I started doing some different things just to try to think outside the box and market a little bit different and network a little bit different, because that's really what it all is. I mean, title insurance, and it differs from state to state, but title insurance is all relationships and service from my end. Because it doesn't matter, especially here in New Jersey, other states are similar. Doesn't matter what company you go to, you're going to get charged the exact same price for the exact same product. So you got to like the people that you're doing business with. So that's kind of where, my whole spiel and my schmoozing nature and all that kind of stuff comes in. So that's kind of like the Cliff Notes version of Mike Ham.
Oh, wow. Thank you for sharing that. Yeah. And I agree with you. What you're doing is kind of outside the box. Like I had, like you mentioned before on other podcasts, title insurance is not exactly like, a fun thing to talk about, but you're making it fun to talk about. And on top of that, you're spreading the word out there using podcasting and LinkedIn. I see you everywhere. I follow your content. So I think you're doing a really good job with all the marketing and branding behind title insurance. So when I think of title insurance now, I think of you, which is really good.
That. Yeah.
And now,
I appreciate that.
And what exactly is title insurance?
Okay, so we're gonna get technical now. I'm gonna make this as fun as I possibly can. I'm gonna try to use as much inflection in my voice to make this sound cool. So, title insurance is different than any other kind of insurance you're ever gonna buy in your life, right? So, title insurance is part of the real estate industry, which you mentioned at the outset. But what's different about it is that, let's take car insurance or health insurance or life insurance. Those are monthly, yearly premiums for things that that you pay. For things that are going to happen in the future, right? So like if you get an fender bender with your car insurance will hopefully cover it. Title insurance is different in that it is a one-time premium that you pay at the closing of your real estate transaction. And again, like the basis of title insurance is pretty standard across the United States, but there's like different nuances from state to state, what the rates are, how much they cost, whether they're negotiable or not, all that kind of stuff. But we'll just take like the basic version. So it's a one-time premium that you pay at your closing for anything that's happened in the past on that property. So like, let's say that there's a lien on the property, or there's an easement through your backyard, or whatever it is. We'll go in, we'll do all the searches. Like, we literally have searchers that go into the county records office, pull books off the shelves, make photocopies. They send it to our production team. Our production team puts together the commitment that becomes the policy, whether it's an owner's policy or a leasehold policy. And then, or excuse me, an owner's policy or a lender's policy. And then we kind of go from there. So basically, it kind of clears up all those issues that would be involved with that transaction, because you're making a big investment and you want to make sure that you are protected in that investment. So basically, once you pay that, like anything that happens after you own that property, that's on you. That's a different kind of insurance. Anything that's happened that comes up later on, that's when, you know, we would get involved and make sure that you're covered.
Okay, so it's pretty much protecting the title and making sure that there aren't any outstanding tax liens or liens from other parties.
Yeah.
Because the average person wouldn't know that, right? There's research that goes behind that.
Yeah, let's say like you bought let's just take a residential example. Like you buy a house, and the guy that you bought the house from hasn't paid taxes in some time. He sells it to you. You don't get title insurance. You have no idea that the bank has a lien on the property, thinking like a bank. You know, bank has a lien on the property. That doesn't follow that guy when he leaves. That now becomes your problem, because you now have ownership of that house, which has the lien on it, right? So that's where we come in. We make sure that those are taken care of, whatever way we need to do that, whether it's, you know, getting the bank to discharge it, whether it's getting the prior owner to actually pay it, whether it's some kind of negotiation that we have to do between the buyer and seller, whatever that is, we make sure that those things are taken care of, you know, before we kind of move forward, because you want to be able, especially, you know, with the lien thing, you don't want any outstanding stuff on your you know, balance sheet, because you, like we said before, you're making an investment in whether it's a residential property or a big commercial property. It's still an investment, and you're still putting in a lot of money to make sure that, you know, you can live and use that property the way that you want. And if you don't know what's there, or what the property looks like, or what, you know, is in your backyard or whatever, you know, that's a problem. So that's kind of how we protect the individual purchasing that title insurance.
Okay, that makes sense. So, and you pretty much, is it required by state law or the lender, or both in some situations?
Okay. So in some situations, I'm going to speak just in New Jersey, because I am an expert in New Jersey. So in New Jersey, it is not required by state law to get title insurance. However, if you are getting a loan from a bank, you're getting title insurance, because they're going to require it, because they want to be protected too. It's just, you know, standard operating procedure. That's pretty standard across the country. I don't think that there is a state that requires it by state law. If I am wrong on that, I apologize, but I don't think that there is. But at the same time, it's just something where, like, because any attorney that you use is going to want to get title insurance. Any bank that you use is going to want to get title insurance. So 99% of the time, unless you're buying like some sheriff's sale, you know, property, or, you know, quick claim deed type thing where you're just taking it as is, those you're not going to get title insurance for, because there's going to be like no way we're going to be able to insure that, because there's just so much, you know, hair on deals like that. You know, so like that's what I would say. So a lender most likely is going to require it, but the state is not necessarily going to require it, just because the state will regulate it if it's regulated in that state. There's some states that are not, but the state will regulate it, and then, you know, that's pretty much where the state's involvement in title insurance ends.
Okay. Now, yeah, as a fellow insurance agent, I understand like the state regulation part. And you mentioned that like as far as pricing, it's all going to be the state. For example, New Jersey, all title insurance is going to be like at a standard rate based off of the fair market value of the property. Is that correct?
Correct. Yeah. So basically, I mean, more often than not, it's the purchase price, which is generally the fair market value of the property. You get some cases where you have like a 501c3 buying a property from a town or whatever. You know, in those cases, maybe they're exchanging it for $1. Obviously, we're not going to insure it for $1. We're going to insure it for the fair market value of the price. There's some different things you can kind of go through to figure that out. Obviously, like an appraisal, whatever, you know, but we'll figure that out on the back end. But more often than not, fair market value of the property is the purchase price. So that's usually what we base it on.
Okay, that makes sense. Now, can you give us an example of like a typical cost for title insurance?
No. So, I mean, I say that because, like I said, every state's different.
Yeah.
So, New York, New Jersey, rates on title insurance are basically like the highest in the country.
Mhm.
So, I mean, this is not going to be, this is like a ballpark figure. You're thinking $2.50 per thousand of that fair market value. So like if it's, you know, do that math.
Mhm.
You're a math guy. So what I would say is, basically, like if you are interested in purchasing a property, just call me.
Mhm.
I can get you a quote on any property, and I can tell you basically exactly, especially here in states or any state that it's regulated, I can tell you exactly what it's going to cost you. Maybe like search costs, whatever, notwithstanding, like that's going to be a little bit harder to kind of quantify because we don't know what's going to be in the search until we actually get in there and start doing that work. But when I say regulated, I just mean that like because it's like a sliding scale and it's like the first $100,000 of the fair market value is a certain price. Then you go up another like I forget what it is, like $500,000. Like those dollars are it's a different
Mhm.
amount. So it's hard to say exactly what it is, but
Mhm.
let's just say like in New Jersey, if you're gonna buy a house, like a standard house, maybe it's like $500,000. Maybe you'll pay I don't know $4,000 or $5,000 in title insurance costs when that's search
Mhm.
premium cost, the whole thing. So that's just like a very rough example.
Mhm.
But like I said, I mean, if anybody wants to know like what a property would cost, just ask me and I can shoot you a quote. No problem.
Okay. Yeah. Thank you for that. And then is that due with the closing cost? Is that part of the closing cost when you're,
Yeah.
for example, on the buyer? If a buyer has to put like, for example, $10,000 as the buying cost, and it depends on the state and other things and other fees, but is that wrapped into it, into the closing cost?
Yeah. So basically, what happens is, like here in New Jersey, like we have closers that we employ that will go and actually do the closings, for these real estate transactions. So when they get there, like they're kind of the ones that are moving the checks around. So when the buyer, at least in New Jersey, the buyer is the one that pays for the title insurance. Other states, the seller might pay. Other states, it's like negotiable. Other
Mhm.
states, they split it. But here in New Jersey, the buyer pays for it. So the buyer will go and they'll have their, all their different checks or their checkbook and writing out checks like crazy. I mean, most people just, they're just blindly writing, money out to different companies. But that is one of the costs that you're going to have to pay at your closing because in a lot of contracts, purchase and sale agreements, there usually are clauses in there that discuss, title
Mhm.
insurance is needed and paid for at the closing, whatever. And, like that make sure that there's clear title because you can't do it after because that's when the transaction is actually taking place.
Mhm.
So that's you get to your closing, that's when you pay for title insurance. So that's when it happens.
Okay. Now, this is kind of gonna be like a negative question, but what can go wrong with the title insurance part?
As far as what, like a claim or like what? Go
Yeah,
ahead.
let's talk about a claim. Yes. Mhm.
Well, I mean, it's very rare that a title insurance policy would come back as a claim. Normally, what happens is something along the lines, whether it wasn't recorded the right way, whether somebody at some point had to make a mistake, and that's when the title insurance. Because as long as you're doing your due diligence on our end,
Mhm.
you should be covered, 100%. But at the same time, like there's just instances where maybe there's like a construction lien on the property, and like somebody didn't record it the right way or whatever it is. So there's some instances like that. Um, but we're protecting against like a lot of different stuff. And
Mhm.
so, some of it might be, whether it, like I said, I used the example of like a lien before. There might also be like an easement, like let's just say that you're buying, let's use the residential example because it's small and it's easy to
Mhm.
figure out. You're buying a house, the power company has an easement because there's a power line that runs through your backyard. You want to put a addition on the back of your house. Next thing you know, you can't because you're going to put it over that power line. Or if you do and you have no idea that it's there, they have to dig it up, and then you got a big problem, right? So there's just like all these different nuances. There's examples of extreme examples of
Mhm.
fraud where somehow the person selling the property doesn't actually own it, and they're selling it to you. So that there's so many different things that can go wrong in a real estate transaction, which is where we come in to make sure that those things are taken care of before we actually dive in and make this transaction happen. So there are instances where we start doing our due diligence and it gets to a point where the buyer realizes that maybe there's too much involved in this property and there's too many hoops to jump through to make it happen because of the work that we're doing, maybe the deal dies. And that's just the nature of the business. You can't really, expect that, but more often than not, it doesn't happen. But that's just, a couple things that can kind of go wrong, I guess.
Okay. Yeah. Thank you. Thank you for sharing that. And you mentioned it's like, it's more about the person, right? Not the actual product. The product is the same, but it's you're pretty much buying into the person. What are some things to look for when dealing with somebody who sells title insurance? What are some qualities that make them kind of good at what they're doing?
They have a beard, glasses. They host a podcast called The Morning Spotlight. They work here in New Jersey. No, I'm just kidding. So I think you need to be involved with people that you trust. And I think that you need to be involved with people that like are, if you're here in New Jersey, more often than not, like the buyer is always the one that has the final say on who they use for title insurance. More often than not, a average Joe buyer does not know anything about title insurance. And if they're using an attorney or a realtor or a broker, whatever, they're just going to use whoever that person tells them to use. And they'll just, kind of go from there. And like I said, it's all relationship driven and service driven. So if the attorney has a good relationship, great. If the realtor has a good relationship, great. But like, there's a lot of, it just in any industry, there's going to be a lot of like sketchy actors and doing some things kind of on the back end that aren't great and, cutting some deals here and there. But more often than not, there's a lot of good people that work in the industry at a lot of different companies. You just need to find somebody that you feel comfortable with and that's somebody that's going to pick up the phone when you call, So like for me, it's probably a terrible thing that I do just for my own personal sanity, but I like to make sure that like my clients know that if they have a question, like if maybe they're working at 10 o'clock at night and if they have a question, they need to call me, I can at least take the call and direct them to somebody that can either answer it or answer it myself, whatever the case may be. But it's just all about trust. People want to do business with the people that they know, like, and trust. And, that's something that I've worked really hard over the last 3.5 years doing this job to kind of build with my clients. So my clients know that we're doing the right things. We have a good reputation as far as a company goes. I mean, I work directly for an underwriter. I'm not an agency. So we're doing things like by the book, the way they're supposed to be done. We're not taking any liberties with that stuff because then we can get ourselves in a lot of trouble. So those are some things that I would just take a look at because, like sometimes you have like, if it's like a smaller agency or whatever, those kind of pop up and disappear all the time. But you have like a staying power with us because we're just so big and all that. There's like a little plug for Fidelity, but that's what I would say. It's trust and making sure that, that your questions are going to get answered. The company's going to be there for the long haul and that you're going to be covered. So, that's what I would say.
Okay. Yeah, that's awesome. Thank you. Thank you for sharing that. Now, as far as, I kind of know the answer to this, but I'm going to ask anyway. A lot of your work is virtual, right? You deal with people over the phone, like your potential prospects and clients.
Yeah.
Okay. And then it's only in the state of New York and New Jersey.
So technically, because we're a national company, I can at least refer deals anywhere. Okay. I am licensed here in New Jersey, so I can only personally work on deals here in New Jersey. But if I have clients that are doing stuff in other states or, people in other states that know me that want to do stuff other places, I can at least refer them to the correct office that can do the deals there. Was that the whole question? I forget what was the other part.
Yeah. Thank you. I just wanted to know if somebody reached out to you from like Florida, would you be able to help them out at least with?
Oh yeah, I could definitely do that. That is the one of the big benefits of working for such a big company like I do is that we have offices all over the country. Okay. So like if the deal is not happening in New Jersey, I know enough people and enough offices that I can at least refer them to the right people to get that deal done. That are going to get it done with the same level of service that our offices here in New Jersey get it done with, if that makes sense.
Yeah, that makes sense. Now, you've also started a group called the Next Generation of New Jersey.
Yep.
Tell us a little bit about that group.
Sure. So the Next Generation of New Jersey started 3 years ago, which is crazy to think about. But when I started with Fidelity, it was, like I said, 3.5 years ago. I kind of went in with no background in real estate, right? Because I was the college baseball coach and didn't know anything, had, no leads, kind of just walked into it. And they were like, all right, go sell title insurance. And first I was like, well, what is title insurance? So I had to learn first. I was not a salesperson. So like my first couple meetings, between not being a sales guy, or like a sales mentality or a sales, techniques, and no knowledge of title insurance, you can imagine that those meetings went horribly. So at least, looking back, I wish I kind of done some things differently, but whatever. So I was thinking to myself, because I've always been very ambitious, right? So I was thinking to myself, if I'm going to do this job, why wouldn't I just go after like the biggest real estate attorneys in New Jersey? Why wouldn't I just go after the biggest developers here in New Jersey? Why would I waste my time with like the small fish, right?
Yeah.
Which I don't mean any disrespect to any small fish out there. I am myself a small fish, but I was getting a lot of the same answers from those people. So like they would say, listen, I would love to do business with you, but I've used the same title contact for 25 years, relationships and service again. So I'm not going to just make the switch to you just because you called me today. And I was like, okay, I get that. Loyalty is very important. I hope that my clients, 20 years from now, get the same phone call from the young hotshot title sales guy. And they're like, well, Mike's my guy. I only use Mike. So then fast forward a little bit, and I realized that once I realized that market, I guess, was not going to work for me, I decided that I was going to shift my focus. I was going to really go after, younger attorneys, big law firms, younger developers, maybe like lower tier stuff, and do that whole grow together mindset. And once I started doing that, the whole nature of my business shifted. And I fast forward that to, I guess it was like maybe January of 2018, I guess now. I had started to build some traction in the young professionals networking community. So I put together a LinkedIn group. I called it the Next Generation of New Jersey, which was just it wasn't necessarily real estate focused, but because I had a lot of real estate connections, it just happened to be very real estate focused. So I started a LinkedIn group, got it up to like 50 people within a matter of a couple of weeks, decided that I was going to run my first ever networking event. So we put together like a little networking event for that group. We got like 15, 20 people, whatever it was the first time. And it was like, it was at a bar here in Morristown, which is where I live. And you come, you pay for your own drinks, you network with the people there, and then you go on your merry way. Like, there's no time limit. There's no requirements. There's no elevator pitch. There's no formal stuff. I mean, I like the idea of, like I said before, know, like, trust. So if you're going to go to a networking event, you just want to be able to like get to know who the person is. That's like why it was so cool when you came on my show. And like, we were going through like the very technical stuff of bank on yourself and, all that kind of stuff. And then the next thing we know, we're talking about boxing, because I just like to know more about the person that I'm doing business with, or I'm networking with, or whatever, because I want to know who that person is. So started that. We'd run those happy hours every couple months. Did that for a couple of years. Fast forward to last year. And obviously there was no opportunities to do any in-person networking events because everything was shut down. So we were supposed to do a real estate focused event. So we would do some real estate focused events that were just bigger, a little bit more involved. We were supposed to do one for March Madness in March of last year. That's when COVID really started here in New Jersey. So we decided we weren't going to do it. I put together a networking event, a virtual networking event on a platform called Remo, basically like right away. And we like checked it out. Me and a friend checked it out on a Monday. I ran my first event on a Tuesday, got 20 people to show up, did them 13 straight weeks. Would get 35 to 45 people every Tuesday night, which was great. And it was a great way for people to kind of connect, people to get that human interaction that they were craving. And it's just a good platform to use. So, like we did that, like I said, for 13 straight weeks, and it was great. I mean, it was a great way to kind of reconnect with people. And it was nice that I had that group that already built to kind of remobilize them and get them involved, because the people that were in that group are like, it's a really solid core group of people. And then we just kept adding people left and right, because as we were doing good things and I was posting about it on LinkedIn, more people wanted to jump in and get involved. So it was just, that's kind of how the Next Generation of New Jersey has evolved over the last few years.
Wow, it's smart that you adapted. That you didn't just like stop networking because there were no networking events last year. It was that you just kind of transitioned it, made it virtual, and kept it going. And now what's going to happen when everything goes back to normal? Hopefully, you're going to have your podcast, the group, and plus the regular networking event kind of all combined together. Yeah. Hopefully, making even more networking connections.
Right. That's the whole thing, right? So like that's the thing I'm most hopeful about when we get back to doing frequent in-person meetings again, and, bigger events, because like when I started the virtual stuff, when I started the podcast, when I started all that, I'm still new, relatively speaking, to the industry. And so there's some people out there that maybe or maybe they feel like it, maybe they are, maybe they're not, whatever, a little bit above my station, right? So like maybe they're more experienced, maybe they have more connections, maybe they have more bigger deals, maybe they have longer standing relationships. Like that's cool. But now they've come on my show, they've come to my event, they've come to whatever. So now I actually have like a little bit of weight behind my name. And that's just all built out of making the most out of a year that overall was kind of crappy. You know, so that's, I mean, you're absolutely right. I think the people that have been working hard to build up that virtual platform, whether it's through a podcast or just content on social media or whatever it is, people that have been doing that are now in a position where they're going to really capitalize on those opportunities when you're able to marry all those things together. The people that really figure out the correct blend are going to, I think, crush it, because I think that we've seen that the benefits of doing a lot of this virtual stuff, the podcasting world, the whole thing, like what that offers to people that are actually doing it.
Oh yeah, for sure, for sure. Now, you know, I appreciate all of that. And with, you know, selling title insurance, your podcast, the group you're running, how do you, and this is kind of to get to know you a little bit better, how do you manage your time? What are some tips you have for managing your time?
You don't want my time management tips. So like, I don't know. I've just always been kind of a person that like, once I get my mind set on something, like I'm just going for it. You know, like this is both a blessing and a curse. Like I don't sometimes plan effectively. But at the same time, like I am not a paralysis by analysis guy. I just jump in and I just kind of go get it. So for me, it's recognizing the fact that like, the stuff that I'm doing right now, even though it's still COVID, you know, times, it's still snowing here in New Jersey. I can't really go anywhere. I can't really do anything. So I need to maximize my time, because once I get to, let's just say the summer, let's just say stuff is good by the summer and they start running those events again, like I don't want to miss the boat. You know, like I have this fear that like I'm going to somehow be left behind if I'm not putting myself out there as much as possible. So it's just a matter of like prioritizing the stuff that I need to get done. Obviously work comes first. Right. So like if I get a deal in, or if there's issues with a deal or whatever it is, that stuff comes first if I'm answering questions for clients, and I'll drop anything to do that. But in my free time and, you know, working from home, you wind up having a lot of free time. I'm recording episodes with you. I'm going on in a LinkedIn Live like I did this morning. I'm, you know, trying some stuff on Clubhouse, which is like a new app that people are really crazy about right now. I'm just trying so many different things to try to get, you know, my name out there as much as possible, so that when stuff does start to roll again, I'm on the train, you know? So I think that's my time management, is just that I want to be the best, you know what I mean? So I don't think that that's a bad thing to say. Like I want to be the best guy that people can go to get, you know, their title insurance from, or get on their podcast or whatever it is. So that's what I'm saying. So I think that is really important. And if you're passionate about something, then you'll find the time to get it done.
You just mentioned something really cool about being the best, and you know that's not a bad thing. What's crazy, I've noticed a lot of people do, is they don't want to kind of brag. They're kind of worried about that. So what they do is they kind of lighten up their goals and dreams. They say, you know, I consider myself to be, you know, they're kind of like lighten it. Instead of saying I will be the best, or I'm going to be, you know, the top in this field or the top in this industry, they kind of lighten it up and say, like, you know, I want to do good. And then what happens is they kind of lighten up their dreams in their own minds, and then they reduce their ambition that way.
Yeah.
So go ahead and say it, like, I'm going to be the best. I will do this. I will be the top at this. You're programming yourself to be the best. So I think what you're doing is really smart. You're saying I'm going to be the best, and you will be, because you're kind of setting the tone in your own mind. You're letting yourself know that's what's going to happen. I'm going to be the best.
Right. Get in the car, put the pedal to the metal, and just go, baby. Just go. Like, you know, like I totally agree with you. I think that, you know, talking to a lot of people that do a lot of different things, you know, like they have these, you know, different goals. And like I said, I mean, I'm not necessarily a planner, so I'm not like, you know, putting stuff together like, oh, if I do this, I'll get to here. Like I am the king of taking stuff, throwing it against the wall, seeing what sticks. And if it sticks, I go for it. If it doesn't, I kind of move on, and I don't get hung up on that stuff. So I totally agree with you. I think that people, when they start to temper their expectations of themselves, they get themselves into this position where like they'll never get to where they want to get to. And like, why, you know, like I know I said, like, I don't mean that to sound like, you know, like I'm, you know, too cocky or whatever, but I think that like, you know, it's okay. Like, why am I going to temper my expectations because that might make you feel uncomfortable? You should want to be the best too. You know, exactly. So like, why not just go for it? You know, so we could all be the best at something. you know? So maybe not, but we can if we really try. So that's my whole goal. And maybe I never get there, but I don't care, but I'm going to try. At least I could say that at the end of the day. Like, I tried to be the best title insurance salesperson that I possibly could be. I tried to be the best podcaster I could be. I tried to be whatever it is. I went for it, and I failed or I succeeded. And that is what it is.
Yeah, definitely. It's the trying part that matters, you know, not the actual outcome, but which I think you will get the outcome. I believe in you, and I think what you're doing is amazing, but it's about the trying as well.
Yeah, thanks, man. I appreciate that. This has been a lot of love for Mike Ham on this episode. I love this.
Do you have any books you recommend that you're reading right now or you've read in the past?
I have not been reading recently because I've just been spending so much time on podcasting and social medias and Clubhouse, and basically, like, I'm either recording episodes on Clubhouse and talking to other people and learning more from there, or working, you know. So I really haven't been reading per se. I mean, I know I should be, because I know that's good for you. But I don't have any books that I would recommend right now because I just haven't been reading.
No problem. Speaking of Clubhouse, I'm actually going to follow you on Clubhouse as soon as we're done with this.
Yeah.
I just started using it.
You're on Clubhouse?
Yeah.
Oh man, I'm going to follow you too. I'm going to like literally do it as we're talking.
Yeah, for sure. It's pretty cool. It's like podcasting on the go, right? It's like,
podcasting, but it's like interactive. You know, like, I've learned so much. I'm already following you. I've learned so much from just, you know, being on there, whether it's real estate, whether it's podcasting or whatever, because it just seems, and it's crazy, it just seems that people that are on that platform are so willing to share and exchange ideas and collaborate and work together. I mean, there are, you know, people that are just trying to do like a quick sale or, you know, like shady type stuff or whatever, like buy my book, buy my class, or buy my whatever. But there's still, you know, as long as you find the right people in those rooms, you know, you're golden, because there's just so much good stuff on there, and there's so many good people on there, that it's been, you know, a great platform for me to kind of get my message out, grow my show, which then in turn grows my title insurance sales or my, you know, reputation in the industry or whatever it is. You know, it's like I'm always trying different things to try to get out there more.
Okay, nice. You know, and as we're kind of winding down now, how can listeners get in touch with you?
So the Morning Spotlight is on every podcast platform. So if you listen Apple, Spotify, iHeartRadio, whatever, we're there. Google, the same thing. Also got a YouTube channel, even though I don't do a ton on the YouTube channel, but it's there. So if you want to watch, you know, like maybe you want to watch me and Siri, one of the conversation we had last year, you can. Actually, no, your episode posted like 3 weeks ago. What am I even talking about?
Yeah.
God, this is all blurred together quite a bit. So, so YouTube, the whole thing. I'm on LinkedIn quite a bit as Michael Ham. I think like the tag at the end of the LinkedIn is Michael-Ham-CTT. It's Charlie Thomas. My email address is michael.ham@ctt.com. And then I'm on Instagram as @TheMorningSpotlight, which has been something that has grown quite a bit since I've been on Clubhouse, which I think is really cool and a lot of fun, and has allowed me to kind of let my hair down that I don't have, my beard hair down, you know, over the last several weeks, just trying to like put together content that people I think will find informative, engaging, exciting, fun, funny, whatever it is. So Michael.ham is the best way to reach me, because that's my email, LinkedIn, you know, and every podcast platform that you listen to podcasts on.
Okay. It's been a pleasure, Mike. Thank you so much for joining us today and sharing your expertise and your background. I look forward to reconnecting soon.
Yeah, thanks, Siri. I appreciate you having me on, bud.
Thank you. To learn more about what we do and how we can help you grow more wealth, please visit www.finassetprotection.com. That's FIN, assetprotection.com. The topics presented in this podcast are for general information only and not for the purposes of providing legal, accounting, or investment advice. On such matters, please consult a professional who knows your specific situation.